Hi, everybody. I am so excited to see you today. Well, I can't see you, but you can see me. So, as you can tell, we have our good friend, Don Rasmussen, here with ChiroTaxPro, back to talk to us about the burning question in everybody's mind, which is, what can and can't we do with all this SBA loan money? He's going to clear that up for you. And even better, we have a very special guest that you cannot see, but you will hear from shortly. And that is Miss Kathy Cook, and she is with the U.S. Small Business Administration. So only Don can bring somebody so cool to our webinar series, and we are so excited to have you join us. So before all 1,000 plus of you ask me this question, it is being recorded. You do not have to request the recording because not really me, the system will email all of you, whether you attended live today or not, a link to the recording so you can go back and listen to it, because I know you will. There are no handouts for today's presentation, so sit back, relax, throw those questions in the chat box, and we will ask them from our two experts today. Don, take it away.
All right. Thank you, Christy. Thank you very much, everyone who's on today. And again, it seems like it's been a while since we last time talked, but there's not been necessarily a lot of activity. I'm going to talk about some things today, but I'll tell you, we've had a lot of DCs around the country who received their PPP money. We've talked about forgiveness in the past. And now, what I'm getting a lot of questions about is the EIDL. And so that's an economic injury disaster loan that many of y'all received, the 7B program. So instead of what I found is being able to, very unusual questions, as I'll pose a few of those today, instead of doing that, having to call SBA and find out the specific answer, I thought, well, let's get the expert on here with Chiro Health. And again, thank you, Christy and Ray, for being able to sponsor this, to be able to bring the information hot off the press. I hate to use this term right from the horse's mouth, because certainly, Kathy, I'm not alluding in any way, manner, shape, or form that you are, but you are the expert here. So I'm going to talk, first of all, about Kathy Cook. So she's a public affairs specialist for the USBA. And one thing, I don't think she put in her bio, but she has been entered into the International Women in Emergency Management Hall of Fame, which is quite an honor based upon the research that we did. So anyways, thank you, Kathy, for joining us today. And so did you want to tell anybody a little bit about where you're located at currently?
Sure. I'm with the Office of Disaster Assistance, and I am located in Atlanta. From Atlanta, I serve 27 states, 1 municipality, and 2 territories. Otherwise, all the states and territories east of the Mississippi River.
Roger that. Well, thank you very much. So let's go ahead and get started. So I know there's going to be a lot of questions. That's the reason why I want to go ahead and get moving along here. So the grant, that's the first thing that most people received if they applied for the EIDL. And the way it was structured was you received $1,000 per employee, up to a maximum of $10,000. Now, as you may or may not know, if you've not received this yet, the likelihood is you're not going to. That program is out of money unless Congress comes up with another funding on it. So we won't spend any time on there other than that is forgiven. That goes back to your PPP forgiveness process. And so I just wanted to let you know that there is no funds currently in the EIDL grant. And so now we're going to move on to Ms. Kathy to kind of talk about those who've applied for the EIDL, what they are. So they're getting some, Kathy, is that correct? They're getting some declination letters, or they're not hearing anything. Can you kind of walk through that process, please?
Absolutely, and thank you for the opportunity to discuss SBA's economic injury disaster loan for COVID-19, because the procedures in place are so much different than any other disaster loan declaration that we've had before. I want to kind of maybe set up a scenario where we think about driving down the road. And we're driving down the road, and when you submit your disaster loan application, it was a streamlined application, which meant that SBA did not require the typical financial documents. You could apply simply by entering the information into the application directly. So when the system accepts the application, one of the first things we do is we review credit. And so that would be a first stoplight. The system goes and looks at credit. We use a credit score. And if your score is above that amount, then your car proceeds. If not, then your application stops and you're declined for unsatisfactory credit.
Hey, Kathy, can I interrupt you just for a second here? I want to.
Yes.
So is it 580? Is that correct?
I cannot disclose. I do not know the credit score, but it's not something that we can disclose either.
Okay. All right. Well, just through some sources.
Yeah.
And you don't necessarily use the general credit services. There's one called Advantage 3 is that you use. Is that correct? Or do you know that?
Yeah, we use Experian and not a specific specialty report.
Okay.
As you work with more credit, different people, organizations that pull credit can, assign different amounts, positive or negatives for certain things. And we just use a regular package. And so again, we're on this road. And what I want to articulate is that a decline is not necessarily a decline. Once we get this application in, the decline very often means it's a decline until we get more information, until we get something to help us analyze things in a different way. For instance, unsatisfactory credit, you might have a low credit score because you are a junior and a senior. And your credit always gets mixed up with your son's. And so the score is not really reflective of your credit history. It could be that you were in an automobile accident and had a large lawsuit. You had delinquent taxes. A whole host of things can happen. But you always have the right to ask for reconsideration. And reconsideration means I, the applicant, the business owner, am going to supply information that would help overcome the reason for decline. Explanation, maybe your credit score has gone up, and you can submit that in writing by email. And if you provide your latest federal tax returns and an IRS Form 4506T, we can take another look at it. So again, no doesn't always mean no. It means no based on the information we have right now. This is the status. Another reason that a business applicant may be declined would be for economic injury that is not substantiated. And this one, everybody goes, what are you, crazy? Every business in the country has some kind of economic injury because of COVID-19. In the streamlined loan application, one of the questions we asked is for the gross sales for the 12 months prior to the disaster. And when we're saying prior to the disaster, we're using January 31st, 2020. So most people are using their 2019 sales figures. All right, so gross sales for 2019, let's say. And if you are a business that has a cost of goods sold, we ask for the cost of goods sold for the 12 months prior to the disaster, which again could just be January through December for 2019. A lot of businesses put in that they earned zero sales and they had zero cost of goods sold. Well, if that occurs, then that means that the business was in trouble before COVID started, because we asked for information prior to 2020. A lot of businesses put in cost of goods sales figures that exceeded the gross sales. That means that, before COVID ever happened, you were selling stuff that costs more than you were selling it for. We also have a series in the same financial section of the application that asked for lost rents. It asked for nonprofit or agricultural operating expenses, and it asked for income from a secular activity, and that related to faith-based organizations. We've had applicants put money, dollar figures in for all of that. So what it's telling us is that the information is incorrect. What we didn't want is we didn't want to know what happened because of COVID. What we wanted to do is assume in a normal year, which we said prior to the onset of COVID, what you were doing and lend you the working capital needed based on that information. So, again, a decline decision doesn't mean you're out. It means based on what you put. The way you can overcome that is write a request for reconsideration and provide the most recent tax return. Your 2019, if that's the most recent you have done, 2018, if that's the most recent. And we ask for the IRS Form 4506T if you want to provide that as well. And then we can go into the system, and instead of showing that you had $100,000 worth of sales and $250,000 in costs of goods sold, we flip it to the correct way. We also have a lot of business applicants that don't understand what costs of goods sold are. And essentially, it is the cost of materials to make a product, or if you buy a finished product, it's the cost of that finished product that you then turn around and sell. People put information in for cost of goods sold that didn't need to put anything in. They just put something in each blank. So by asking for reconsideration and providing the information from most recent tax return or profit and loss statement, we can correct that. Another reason that we may decline your application is due to character reasons. A section of the application asked a series of questions. Have you ever been arrested in conjunction with a riot or civil disorder? Have you been on parole or probation? You committed a felony? Have you committed a misdemeanor? And the answer to some of those might be yes. It doesn't mean that we cannot lend to people who have had a criminal past. It means we need more information. We need to know what you did, when you did it, where you did it, and what the disposition was. So, for instance, let's take somebody that wrote bad checks and they were put on probation. And this occurred 10 years ago. The SBA management can look at the information and they can determine whether or not this is significant enough to keep the loan as a decline decision, or whether it is not that significant in this day and time because enough time has passed since the probation and allowed the application to go through. Sometimes the infraction is significant. It might involve, kidnapping or robbery or something like that. In those cases, we have a form and we will ask the person to complete it with all the details of what happened, when it happened, where it happened, the disposition. And we may have to send it to our headquarters to give to the FBI. Once the FBI gives us reports back on any criminal history, then SBA management can make a decision. So again, I can't tell you every time that you request a reconsideration, it'll turn out to be a positive decision. What I want you to realize is that a lot of times when it is a decline, it is because we need more information to make a decision. Sometimes you may decide that you don't want to pursue this loan. When people asked about the streamlined loan application, there's actually two components to it. And one component was to address your needs for working capital through the economic injury disaster loan for the COVID-19. And then the other part was for the emergency advance, the forgivable loan that was offered at $1,000 per employee up to the $10,000. Well, some people didn't want the economic injury disaster loan. They just wanted the advance. So they didn't complete any of our further requests for information. That would be an applicant's change in plans. However, there's some times, such as when we give you a proposed loan amount, and we send an email asking you to come to the portal and select the loan amount. Why we're saying select is it's a proposed loan amount, but let's suppose that you did not want a secured loan. You can borrow up to $25,000 without pledging any collateral. So you come to the portal and you see a proposed loan amount for $30,000. But you know you only want $25,000 because you don't want to pledge collateral. Then that's what you can ask for. You can put $25,000 instead of the $30,000. But some people want to talk to their partner, they want to think about taking a loan, and they never come back to the portal and select a loan amount. We generally give up to 60 days to make this response and make this decision. If it's longer than that, then SBA will send a decline letter saying you failed to proceed. And you'll have up to 6 months from the date of the letter to tell us, yes, I intend to proceed. I've made a decision. My partner is on board now. Please return the application to processing. Another time this might occur is when we actually prepared the loan closing documents. Those are the documents that you would sign, promissory note and a loan authorization and agreement, kind of a contract between SBA and yourself. And it tells you the policy regarding this particular loan program. Again, you have up to 60 days to sign it, but we've had cases where there's partnerships and the one partner doesn't see that his or her signature is also required. They just didn't see it when they pulled up the document. And so the document has not been perfected. And if it goes beyond that 60 days where it incorrectly completed or whether it's not signed off at all, then we would withdraw the application and give you up to 6 months to come back in and say, yes, I'm interested. All right, so we're driving down the road again, and we have another reason for possible decline, and it's because the applicant is not a small business. In our streamlined loan application, we have tried to make it as easy as possible. Normally, a business has to qualify as a small business by its type of industry and the corresponding revenue or number of employees. And there's an SBA quote size table to help you do this. Well, in the streamlined loan application for COVID-19, we said any business that has 500 or less employees is automatically a small business. Don't have to think any more about it. But what if you had more than 500 employees? What if you had 515? Then in those cases, we are going to have to look at the SBA size table to see if you truly are a small business according to the size standards that are published in that particular regulation. It's very rare that we have businesses that exceed the size standard that are asking for the economic injury disaster loans, but it does happen. And again, no is not necessarily no. No is we need more information. So in those cases, that applicant has to look up their industry classification code and look at their revenue or the number of employees to see if they are truly a small business. All right, so let's say everything's fine. We've got good credit. We put the right figures in for the economic injury sales. We had no issue with any criminal background. We followed through, and we're not a small business because we have 500 or less employees. The next thing that might be a stoplight is delinquent child support payments. Generally, we find out about this on the credit bureau report. SBA is prohibited from lending to businesses whose owners have a delinquency in child support of 60 days or more. And what can you do? Always can ask for reconsideration and provide proof that the child support payment is either one or not correctly on your credit report, or that you have caught the payments up and you give us documentation from the courts or the state or whomever, and then you send that with the written request for reconsideration. We'll take another look at it. Business activity is not eligible. By law, there are certain businesses that we cannot help, certain industries that we can't help. I would say probably the most common that anybody would think about would be a city, county, state, or federal government. Any of those entities that had problems because of COVID-19, we can't help. By law, we cannot lend to municipalities or any other type of government. And the exclusion to that would be a tribal nation. Another type of business activity that's not eligible is lobbyist. We have certain chambers and other organizations that are involved in lobbying, and some are not. So if you are involved in lobbying, it's not a yes and no. Sometimes we might need to get more history of your business and get the background of how you operate to make a final decision about that. And then we come to the last one. So we've gone through all these lights, everything's green, and all of a sudden you get a letter and it says, unfortunately, we were unable to approve your economic injury disaster loan application due to unverifiable information. If you provide information to overcome the reason for the decline, then send it to us by email along with latest tax return of 4506T if you prefer, and we'll take a look at that. You go, well, wait a minute. What is unverifiable information? What the heck is that? Well, some of the things it includes is if you are not a U.S. citizen. It doesn't mean that we can't lend to individuals who are not U.S. citizens, but we do have to make sure that the owners, let's say if it's a sole proprietor, are here legally. So in those cases, the person needs to write a letter for reconsideration, and they can provide documentation that they're here legally, such as a permanent resident card. Another reason that we might have unverifiable information, and probably the most common, is the banking information does not match what the bank system says. We troll the different banks through the automated clearinghouse, and we've asked the applicant to put in the name of the bank, the account number, routing number, and we take from the application whatever legal name of the business is to assume that that is the name on the checking account. Well, let's pretend Kathy Cook has a florist shop, and Kathy Cook's florist shop is Kathy Cook FTD. But Kathy Cook operates as a sole proprietor. The legal name of a business that is operated as a sole proprietor is the name of that individual. The doing business as is the name of the business. So if I put Kathy Cook Florist Ltd. and my checking account for the business is Kathy Cook, they're not going to match. That's a problem. We've had individuals who have given us debit card information. That's a problem. The U.S. Treasury is responsible for dispersing the funds directly to the business applicant. They cannot disperse to a debit card. If your particular bank, it could be e-commerce or it could be brick and mortar, does not work through the automated clearinghouse, then those numbers will not result in a disbursement. We've also had people who have missed a number, added a number, inverted numbers, and so it's critical that if you're not getting money, And for some of you that might not have gotten the advance, if the banking information was wrong, that's what happened. That delay prevented us from being able to issue a timely economic injury forgivable advance. Another thing that can happen is tax ID is incorrect. The system pulls that. We've had several situations where people have put in a tax ID number that's the same as for someone else, and they just didn't look at their source documents. They thought they knew the information by heart. So things like that can be easily cleared up with a written request for reconsideration and documentation to help prove that this is your bank account. For instance, a voided check. Or to verify your tax ID, you could provide a copy of your most recent tax return. All of these things are avoidable if we take time when we're completing the application and entering the correct information. But we all have a lot on our plates these days, and mistakes happen. So that's why it is best not to get upset when you get a decline letter, but to read it carefully and think, why is this a decline for instance, the economic injury not substantiated? Just know that the financial information provided was not supposed to be after COVID. It was supposed to be before COVID. And if your gross sales are less than your cost of goods sold, then there's a problem. Also, not everybody has a cost of goods sold. If you don't, then put 0. All of these things are, again, things that can be resolved with reconsideration. And if you want to submit your most recent tax return and the IRS Form 4506T, that generally is helpful. In some other cases, such as you're not a U.S. citizen, other information is needed. The way that you can send the reconsideration request is through an email, and I have the 2 most commonly used email boxes for you. And if you haven't applied at all, I have the URL there and our SBA customer service center number. But again, we are working with unprecedented and trying times, and SBA is here to help guide you through the process and work with other partners such as small business development centers, tax masters, and others to help guide you through the process. And no doesn't always mean no. Sometimes no means until I get more information. So with that, I will turn this back over to Don so that we can address some of your concerns.
So everyone who's on here, what I like to do is kind of segment our questions. And so first of all, Kathy, you told me earlier that over 11 million applications submitted. Is that correct?
Right. We have over 11 million applications submitted.
Yeah. So they were quite overwhelmed based upon our conversation earlier. So the reality is, that they're overwhelmed because they're getting a lot of these type of declination letters and reconsideration. So it does take a little time once you submit this. Is that correct? About how much time on average do you think someone would expect once they submit a response back to the reconsideration department?
That's very hard to say because we're getting tens of thousands of requests for reconsideration. I would say if people are now just submitting an application, they might get all the way through the process, all the way to disbursement within 2 or 3 weeks. Okay. And when we're saying 11 million, it sounds like a lot, but it doesn't sound like too much. That amount equates to all the loans that we've done since 1953. I mean, we've exceeded our loan history. And so it really is an unprecedented situation. I mean, this is like taking
So I assume you all can still hear me because I think we lost Kathy for a little bit. You still there, Christy?
I'm here and we can hear you.
So why don't we do this? Why don't we, do you have any questions yet, Christy?
We have a lot of questions.
Okay, so go ahead and shoot them off, and then we're going to continue on because we're going to talk about what you can use the money for and what you can't use it for. So we're going to talk about it in just a little bit, but go ahead, Chris. I'll let you go ahead and send some questions off to Kathy.
We were surprised to receive the entire amount of the EIDL loan that we requested all at once. Now we are surprised to start getting the interest payments noticed. Isn't there a way to just borrow a small amount at a time so we do not accrue high interest costs?
Okay, the interest rate is simple interest, and it's 3.75 for businesses and 2.75 for nonprofits. We are not in a position where this is a routine disaster, and we can't just dole out 10,000 now, and then when you need your next draw, give you 20,000, and next draw, 30,000. We are trying to expedite everybody's case as much as we can, and that's why the money comes all at once. Again, it's simple interest, which means interest only accrues on the unpaid principal, and there's no prepayment penalties.
Okay, so our next question was, to avoid some of the interest, can I send back a chunk of the amount I received with my next interest payment that I don't think I'll need?
Did we lose her?
I think we lost her.
I'll answer that question because I believe I know the answer. Yes, you can. So you can send as much as you want in there, and that'll start dropping your interest rate. And, one thing I've mentioned to our DCs around the country, Christy, is that, we don't know how long this is going to extend. And it's like car insurance. Yes, there's some interest or some cost there, but it's more about, what if. And so certainly if you have lots of resources and you don't need to hold on to that for the maybe a second wave or whatever it may look like, certainly do so. But if not, it is deductible interest, as a tax planner, number one. Number two, you can send back more if you realize that you don't need as much, you certainly can. So you back with this, Kathy?
I think so.
Okay. Is that correct? Did you hear my answer to the question?
Yes. Okay. You can send the money back. The one thing that is problematic is that you can't then turn around and reapply for that. Once it's paid down, paid back, that's it.
Okay.
Yes, thank you.
Sure. Next question, Kristen.
As chiropractors, we are not necessarily selling products, but selling services through adjustments and therapy. Should we be using our gross salaries for services?
What you need to use is the information as it's reported on your tax return. Okay, so
on the top of your tax return, if you're an S corporation, you're going to have your gross revenue. That's what you're going to put in there on the top line. And if you do sell vitamins or braces or whatever, that would be your cost of goods. So your gross revenue is going to be showing up on the top of your 1120S or your partnership of 1065. If you're a sole proprietor doing a Schedule C, it's going to be line 31. I beg your pardon, that's not correct. That's going to be that's for PPP. So it's going to be at the top of your Schedule C as far as your gross sales as well. So it's going to be at the top of your tax return. Just keep that in mind.
Loans over $25,000, are they personal or business collateral?
It is business collateral, and everything except for real estate. So it would be machine and equipment, inventory, furniture and fixtures, accounts receivable, but not real estate. So I would say if you're just in the process of getting an approval and it's close to the 25,000, just maybe choose 25,000 instead of 30. But if it is, you're being offered 100,000, that's quite a bit different. And I would consider, taking the full loan amount, because we really don't know when this COVID disaster is going to end.
Mm-hmm.
and you can always return. You don't have to do it today. 1 month is not going to make that big of a difference. 2 months of interest is not going to make that big of a difference. Wait until you see what's going to happen, and then if you don't have a need for the extra money, submit it back.
We have a lot of questions about what they can and cannot spend the money on.
So I'll get that one here. So I had a couple questions for you, Kathy. So when they receive these funds, recommended that it go into a separate account?
If you have a PPP loan, then I would recommend that the economic injury disaster loans for COVID-19 go in a separate account. Okay. That way you can ensure that you're not using both sets of funds for the same thing.
Okay. And then I'll go back to the collateral question. I've heard this a lot. First of all, when it comes to collaterals, first of all, it will not prevent you from getting the loan, correct?
Right.
Secondly, when it comes, I've not seen, and I've of course worked with a lot of clients around the country, I've not seen a request for collateral. I know you file the UCC when they request the money, but I've not seen any request for collateral information. Can you kind of elaborate on that, or when that will happen?
All right. The best way to think about a UCC, Uniform Commercial Code filing, think about your car. If you buy a car and somebody lends you the money, whether it's a bank or another type of financial institution, they have a lien on your car. Well, what we do is the same thing. We file a lien at your business property address. And the lien says, hey, everything that's here, in the event of default, SBA can take whatever they need. All right. Now, I want you to remember what I'm saying. In the event of default, the Small Business Administration does not want your chiropractic, not want your TENS unit. We do not want.
She's breaking up again. So the reality is the SBA does not really want their stuff. They want their money back. I don't know if she can hear me. All right. So that would be the answer. What's any other questions on the application process?
No, not really. Everything is about what can we spend this money on.
Right. So let's go ahead and move off to that. So let's talk about the do's and don'ts. So Kathy, can you hear me okay? I guess she must have a bad internet. So let's go ahead and take some of the questions, see if I can answer them when Kathy comes back, or we can hear her. Then she can chime in as well. Oh, there you are. Go ahead and shoot those off, Christy, if you want.
Okay. I have a personal credit card that I took out to start our business that has high interest. I would like to use the EIDL to pay this off. We are a partnership LLC and we pay ourselves exclusively through owner draws. Is this allowed?
All right, Kathy, you there?
Right.
I get that all the time.
Well, first of all, the loan is not meant to pay off fixed debts or to pay off loans that are higher interest rate to improve capital position. That is not the purpose. It is to provide money to pay the debts and obligations in the same manner you could have had COVID not occurred. So, the salaries of your employees, the costs for the inventory, utilities, payroll taxes, all of those types of things. But in the document, it will say that you are prohibited from paying the corporate officers' bonuses, dividends, all those types of things. Again, the funds are for making up the difference between what you would normally have as far as revenue and what you need to survive.
Okay.
So you mean the question I got from, I won't say where in the country, from a DC, can I pay my boat off with this money?
You may not pay your boat off. Again, the way is very vague in your loan closing documents, and appreciate that in some respects. What it says is it's for working capital needs. You can't go on vacation with it. You can't give it to me to go on vacation. You can't pay for the birthday party for your grandson or your children's college. It is for the same things that you would have paid for had the disaster not occurred. So if COVID didn't happen, you pay the lease payment on the building. You would pay the quarterly taxes. You would pay real estate taxes. You would pay for the inventory for the tissue that goes over the chiropractic bed and the ointments and whatever it is. But you can't use it for non-business related situations. You can't use it to expand. You can't use it to consolidate debt. But you can use it in the same manner you would have used the revenue that you would have raised before for business related items.
Can I ask you a question on that there? So let's say, for example, I'm a chiropractor and I have a business credit card that I'm using my operating account to pay off. So I'm using my operating account. So let's say it's a $2,000 or $5,000. And I use my operating account to go ahead and pay that off like I would generally. But then I get short on covering payroll this month because I just did that. Then I can use EIDL money to use that for payroll. Is that correct? Did I lose her again?
Yeah, I think you did.
It must be a government internet. But anyways, that's another conversation. Let's take another question, and then if she comes back, Kathy, just let me know when you come back. All right, next question.
I love that you asked that question because the next question was, so we can use this money to make payments on business credit cards? Question mark.
Yeah. The answer is no. So I think what Kathy was very clear there. You can't. It can be used for what I've been telling my clients: payroll, rent, utilities. For the most part, everything you
health insurance, quarterly taxes, everything that you would have used the money for. If you have, because you're sole proprietor, if you have credit cards and that's the way you buy your inventory, you can pay off that credit card. If you have a credit card and that's the way that you sign up for services to save medical records, let's say, or to purchase equipment, that's fine. But what you can't do is take fixed debts, which mean they pay off over a year or more, and pay that off. So let's say in my bakery scenario, I have a van, and so can I take this money and pay off my van? No, you were paying monthly installments on the van, continue monthly installments. If you have a loan and it's 19% interest and you owe 3 years on it, and you say, well, I'd rather just, pay that off with this 3.75% interest. No, you cannot. That's not the purpose of the loan.
So Kathy, did you hear my question earlier?
Maybe not.
Okay. So my question was, I'm a chiropractor, pretend. And so let's say, for example, I have a credit card that has a $5,000 balance for the business, and I'm going to use my operating account, from the revenue that comes in from our practice, and I pay that off. But because I pay that off, it shorts me on payroll. And so then I could use EIDL to cover my payroll. Is that correct?
Absolutely.
Okay. It's all about documentation and paper trail. Is that correct?
Well, it's that, and I don't want everybody to think they, have to document everything to death. But what we just need to be cognizant of is that these are taxpayer dollars. All right. So the taxpayer wants to help, but they don't want to enrich the business. And I hate to say that because I know you're hurting. I know you are. But we can't have you get a new car, a new van, a new boat, a new this, expand your operations with this. It's supposed to tide you over. That's the basic way of thinking about it.
Gotcha. All right, Chris, do you want to throw another question?
Well, this is too, so based on the example that you just gave, Don, so somebody wanted clarification. So he said, can we use our accounts receivable are non-EIDL funds to pay ourselves back for loans we made to our business while using EIDL funds for approved purposes. So basically he's saying he had to take money out of his personal account and make a loan to his business. Now that he has the EIDL funds, can he take the money that's in his accounts receivable that is non-loan funds, pay himself back for that $5,000 loan he made to himself to float him before the EIDL came in, and then use the EIDL funds to pay his payroll expenses and things like that?
That's going to be hard to show accounting-wise. What I want to say is, if you had to borrow money in order to tide the business over before you got the EIDL funds, then it is perfectly legitimate to be able to take the EIDL, the Economic Injury Disaster Loan Funds, and pay off that, quote, bridge loan or that interim financing. Where there's a problem is that the expectation in a lot of the language of SBA's loans is that an owner will stand aside, and not use the money to pay themselves. That's where there's a little complication. But I think if you carefully document it, I don't think that there's an issue. Now, where there would be an issue is not paying your salary, let's say, but you lent the business money and you never took a draw to pay down that loan that you lent the business. And now you think, well, we've got some money from SBA, we can do that. No, I wouldn't do it.
So because there wasn't a history is what you're saying.
Correct.
Gotcha. Okay. Good question though.
So just to be clear, they can use the money to pay their business credit card that they use to make purchases for the business.
Correct.
Okay, just making sure, because that was just asked like 5 times in a row.
Well, and I want to say this too. I am not an auditor. I'm not an accountant. I don't work in servicing. So when in doubt, you may have to, it depends on how critical this is, you may have to write SBA and get a written request. Everything is not black and white. Your scenario, although you might have said something, if you added something else to it, the answer would be different. So Don and I are giving you the best guidance we can, given the knowledge and experience we have.
So somebody's wanting to know how the EIDL and the PPP work together, and how do they ensure they reach maximum PPP loan forgiveness?
So I guess unless you want to, I know you said you don't do PPP, Kathy, but so the biggest thing is going to be when it comes to, and correct me if you have any input there, Kathy, but the biggest thing is going to be documentation. Because they've gone to now the opportunity for 24 weeks instead of just 8 weeks, it's a lot easier to maximize your forgiveness. I have some DCs who have chosen to use that PPP money specifically for payroll, and that's it. Some have, and again, that's totally your discretion, or maybe the payroll and the rent or the mortgage interest. So that's going to be your maximization. And as long as you hit that 60% number of the funds used for payroll, then and that the other 40% are used for authorized transactions. And I'm going to talk a little bit about some proposals by the Senate here just a little bit. But that's really what you have to do. Make sure you document it. Make sure you can provide that, and we have a calculator. If you like that, we can provide that for you at no charge. Just let us know. But the big thing is just documentation. And like I said, payroll may be enough to wipe it all away.
Oh, go ahead, Kathy.
Well, I would say what Don said is correct. And even at this point, if all the PPP funds have been exhausted and you've documented that, then there's no duplication if you're just now getting the economic injury disaster loans. Where the problem comes in is a concept called duplication of benefits, meaning that you have 2 sources of income and you're using them for the same purpose. But normally when we say that, it's at the same time. Now that the PPP is gone, if you've finished and exhausted all of those funds and you're just now getting the economic injury disaster loan, there shouldn't be any duplication.
Right.
Even if you use the EIDL funds for the same purpose as a PPP, those are exhausted, so they can't be considered duplicative. It's a little harder to explain, but certainly, can depend on Don and then other SBA resource partners, small business development centers, and just kind of think of it as the government is lending you the money to, quote, kind of tide you over, but you can't use the money from the PPP for the same thing that you're using the EIDL funds for at the same time. So I think at this juncture, it's a little bit easier to document because the PPP program is over.
All right, Christy?
Does the grant amount you received under the EIDL program reduce by the same amount that you can be forgiven on your PPP loan?
That is correct.
Are there any updates on interest rate reductions for DCs?
Yeah, there was a bill proposed. There's not been any movement on that. It sounds like Washington can't really agree on anything up there right now. So the reality is not right now, still 3.75% for profit.
I have not received a payment notice. Should I have? I've had the loan for 2 months.
I would have thought you would have gotten it, but we are, again, with a volume of activity that we never had before. So I wouldn't be concerned until it went maybe another month or two. And you can always call our toll-free number or write disaster customer service all together at sba.gov or just say, where do I make payments to? But you should be getting them, and you should be getting them through, quote, snail mail.
And we'll take a couple more questions, Christy.
I was under the impression the repayment of the EIDL would not be for a year after disbursement, but it sounds like some people are making interest payments earlier.
As they can.
Okay.
They're not required to, but they can if they want to. Is that correct?
Correct.
Let's see. Can you pay for prior costs owed, like past rent?
Whatever is normal operating expenses that you're, having problems with because of COVID, sure.
Are we allowed to use the money for items that for seminars and travel to seminars that we would routinely be attending each year?
Again, some people might say, well, that's a discretionary thing, but if you're continuing to do something that you would have done had COVID not occurred, and it's a regular situation, not upgrading, then I see no reason why not.
Let's see. Did you say that the EIDL cannot be used to pay the doctor's draw if that is how the doctor is regularly paid prior to COVID?
It depends on how you're organized. The way that the loan closing documents reflect a prohibition of, let's say, directors and LLCs from receiving salaries and bonuses and distributions. That is in the loan authorization and agreement. What I'm saying is, now that the PPP is gone, part of your payroll is salary for the doctor, then I think you have a justification to continue that salary payment. But again, I am doing the best I can to offer you information, but you may want to get that in writing. You might want to write SBA or just revisit your loan closing documents.
So, Christy, I just want to cover a few more things before we wrap up today about some things that have been proposed. And so I know that if they have more questions, that you can get those over to us and we can get their answers for you. Is that correct, Christy?
Yes.
All right, awesome. So the reason I wanted to spend a little time, because I'm getting a lot of questions. So right now, Washington is in a heated debate, if you want to call it that. And I'll just tell you what the Senate has proposed. I won't spend time on the House right now just because this is kind of where the wrangling is about the Postal Service and things like that. But I want to talk specifically about for you DCs out there. So number one, the first proposal was that additional expenses they're going to allow, or they're proposing, is operations expenditures, property damage costs, supplier costs, worker protection expenditure. Those would be additional. Allows you to select the covered period of either 8 weeks or 24. Unless you've already spent all your money in the 8 weeks, then the 24 might be your best choice. Automatic forgiveness. This is huge. Automatic forgiveness for those loans that are under $150,000. You have to keep, as long as you sign the good faith effort, no documents are submitted to lender, but you have to hold on to that documentation for 3 years. So that's the first proposal. If you're one of the DCs out there, we got between 150,000 and 2 million, again, they're looking for an automatic forgiveness. You do have to submit the documents to the lender. Again, you have to test a good faith test. And I think ultimately what it comes down to, the reality is, she just said 11 million applications. I know there's even more or close to that around on the PPP. They're inundated. And so the banks are inundated. So you think of all this documentation, all the hours and the time. I really believe that there's not probably a Democrat or Republican up there that really wouldn't give some strong consideration in approving this, at least the first one, under 150,000 for sure. Ability to get a second wave of PPP funds. I get that question quite a bit. Again, this is a proposal. Nothing's been signed yet. So until they sign it, this is not law. And then what they call a PPP second draw funds. And then, of course, making those draw funds, the second wave, forgiven. So that's been the proposal from the Senate. And then, of course, on this tranche, if we want to call it that, the maximum loan is going to be $2 million, which all my DCs out there are not going to fall in that category anyways. But for those other businesses out there, they're going to cap it out at $2 million. Ability to request in loan amount on your original PPP loan. So the original PPP loan, they're looking at giving you an opportunity to request more, not necessarily a second wave, with the whole guidelines, but just a request for more funds under PPP. That's been the other thing that they've recommended. Now, again, hopefully we'll have something wrapped up here, if not by the end of this month, maybe the first part of September. So just keep, we'll let everybody know at Chiro Health. We'll get emails out to everybody, let them know what has happened. But we didn't want to spend a lot of time on here because this is just a proposal. So as they all have to do up in Washington, they have to fight over everything and throw some other things in there as well. Last thing here is on the additional loan that they're putting out here is they're proposing a 7A. It's not going to be a PPP, but they're going to have an interest rate at 1%, ability to defer principal interest for 2 years, and ability to grant another 2-year deferral. So this may be, I call it a bridge loan. In other words, more funds out there a little bit later on. So again, keep in mind that the government has not forgotten you yet. And I know I talked to a DC today who's still running about 60% over on the West Coast. So I know some of you DCs out there are really still trying to get your traction. You got states that are preventing you from getting your patients in, but we're going to keep on top of that and keep you informed. So last thing I wanted to say before we wrap up, because I want to be cognitive of time, is if you have not contacted us about getting R&D tax credits, this is some more funds that can come to you. That's your money. We have helped. I think we've had 135 DCs who have requested this year, and we're getting, 50,000. We have 150,000. So it depends upon your practice, but we're able to secure R&D credits that you didn't even realize you're eligible for. So again, we want to get some more money out to y'all. And the second thing is there is a lot of states out there that offer tax credits as well that a lot of DCs are not aware of. So when we look for the federal, we also look for the state. And anyways, it's money. It's free money. It's your money to come in your own pocket that you overpaid. And we'll take it a point to put some of that money in your pocket. If you're interested, go to our website, which is ChiroTaxPro.com. and you can click on there for an appointment for more information. And I just want to say, Christy and Ray and everybody at Chiro Health and Kathy, thank you so much for taking out the time this afternoon to spend with us, and look forward to talking to you further in the future. And if we don't have any closing questions, Christy, it looks like we're right at 3:15.
We are, and you always end right on time. So a lot of y'all, I answered your questions privately while Don was closing up. And just for those of y'all who are like, wait, why would you answer this privately, not publicly? It's because the questions had already been asked and answered. So if you still have questions and we didn't get to them, it's probably because we did ask a question that already asked a question and it was answered. Go back and listen to the recording. The recording is being sent to all of you. If you still have questions, Don has a contact us form that you can submit your questions to, and his team will answer those questions for you. Now remember, there are over 1,000 of you. There are not that many people who work with Don at ChiroTaxPro, powered by Quartermaster. So please be patient and understand that this is just like SBA, and there are 11 million applications. It takes some time. So if it's like 2 days and you have not gotten an answer, just take a deep breath and just realize we're coming, we're getting to it. I also included the link so that you could schedule a consult with Don and his team in the chat box, which is strongly encouraged. So click on that as well. Again, just a reminder, next week we have Dr. Evan William. We are going to take a break from COVID conversations to talk about the new Medicare APN form. Because despite all the stuff with the pandemic and all this insanity, we have to talk about business as usual. And then we will start back up in September with Dr. Fab Mancini, who wants to talk to us about how to thrive in this new normal. I tried to get him to change the title of that because I told him I don't like new normal. I like my old normal. Fab, he cannot be deterred. So, but it'll be fun to have some Fab fun with Fab right before we go on the Labor Day holiday, which you have all earned and deserved with everything that you've been through in the last 5-6 months. So again, make sure you submit those questions. If you send questions because you are watching the recording, you're like, my question didn't get answered and you didn't click that link, it's going to email it to me and I'm going to submit that link and I'm not going to respond. The fun Fab folks at ChiroTaxPro are going to email you back. So, love you, and I cannot wait to see you all next week. Kathy, thank you so much for being our special guest today. And as always, Don, thank you for being a frequent flyer on the ChiroHealthUSA webinar series, answering all of these crazy questions that we all have about government loans.
Thank you, Christy.
Thank you, Christy.
Bye, y'all.
Bye-bye.